So imagine we're in Moscow this week, walking the streets and various citizens going about their daily lives. We see one woman walking into her bank and soon after exiting with what looks like various envelopes. Indeed, that woman has just gone into her high street bank, withdrawn all of her savings in cash, gone home and been putting the money in various locations around her house. But she is not alone. Across Russia, quietly and without any announcement, millions of Russians, millions of people are doing the very same thing. Not in panic, mind you, not in a rush, just deliberately, methodically, choosing to hold their money in a place they can see it over a banking system which right now is offering interest rates most Western savers can only dream of. You see, when ordinary people stop trusting a system that is offering them nearly 21% returns to keep their money in it, well, something is fundamentally wrong. And what the behavior we are seeing across Russia right now reveals the very true state of the country's wartime economy. And it is more alarming than anything the Kremlin will ever say at a press conference or that Vladimir Putin will be able to ever admit.
This is the Global Gambit.
How you going, everyone? Welcome back to the channel. Now, this video is partially inspired by an article I read in the BBC, specifically BBC Monitoring, which is the open source intelligence branch, if you like. They take open source data, crunch the numbers, and come up with some rather interesting assessments. And, well, it was that interesting that I thought it was worth a video. So that'll be in the description. Now, to start with, let's look at specific behavior here, because it matters that we understand exactly what is happening before we get to the why. Russians are withdrawing cash at unusual and sustained rates. Now, critically, it's important to emphasize this is not a bank run. There are no queues, no scenes of panic or dramatic collapse. We did see panic buying at one point over the weekend after Ukraine strikes on Wildberries. A link to the video and my assessment of that is in the description as well. No, what we're seeing is people with savings, moving them out of the banking system and keeping them physically. This is a quiet, distributed withdrawal of trust. People who are being paid, choosing to spend immediately rather than save. Not because they want to buy things, but because they expect the money to be worth less than next month than it is today. People who would normally finance large purchases on credit card pay cash in full because at 20% interest rates, debt has become something to fear rather than use. So this is what economists like myself call a flight to tangible assets. And it is happening in a country where the official inflation rate just hit a 5-month high of 6%, with fuel costs running at nearly 20% inflation. If you think the cost of living in your country is high, look at what's happening in Moscow. The numbers explain this behavior, therefore. But the behavior tells you something the numbers alone can't. That ordinary Russians making individual decisions with their own money in their own homes do not believe the official story about economic stability from the Kremlin. The Kremlin has spent years telling the Russians that sanctions aren't working and will not work. They have ways to mitigate them, sidestep them, etc. That the economy is and will be resilient, that the war's costs are manageable. The cash in the drawers, under the mattresses, says otherwise. But here is what makes the cash story more alarming than it first appears. Because the people withdrawing savings and avoiding debt are the rational ones. Millions of others didn't get to make that choice. They never got the memo because they were already in debt before they understood what was coming. A new report that was obtained by Reuters revealed something that should be front page news everywhere. Russian banking systems are not sitting on organically generated debt. It is sitting on politically engineered debt. The difference is that the Kremlin is facing growing budget strain from the war. It's been using banks to pump liquidity or extra money into the economy. And state programs, so not fringe leaders, state programs, have been encouraging millions of Russians to take out 3 or more loans simultaneously. 3 or more loans at the same time, encouraged by the Russian state. So think about what that means for the person, the average Russian, sitting in a Moscow apartment right now, trying to service those multiple loans at 20% interest, watching their grocery bill climb 18% in 2 years, earning wages that look high on paper but buy less every month. They did what the government told them to do. They borrowed, they spent, they injected money into the economy. They kept the economy looking healthy from the outside. But now the bill has arrived. Put it another way, 7 out of 10 Russian enterprises say that the high cost of credit is undermining their business. The main fear for Russian companies in 2026 is not sanctions, it's not competition, not even the war. It is non-payment by counterparties, i.e. companies that cannot pay their suppliers because their customers can't pay them. So a credit crunch spreading silently through the civilian economy while the defense sector consumes everything else. So this is a trap, and it was built deliberately by the people who are now telling Russians that the economy is perfectly fine. Nothing to see here. This is all totally cool. Russia's GDP growth for 2026 is projected at 0.4%. Not 4%, certainly not 14% like China in the 2000s, 0.4%. This is a country pouring half its entire government budget into military expenditure. Half of all civilian industrial subsectors now are in decline. Companies are competing for workers at war-inflated wages, borrowing at those rates of near 20%, and selling into a market where consumers are stretched, scared, and choosing the cash over credit. So the civilian economy is not growing. It is being quietly cannibalized by the military economy that sits right next to it. This is something I was alluding to in February, the idea of cannibalization in the Russian economy, but it's becoming so much more evident between the two types. Now, Russia has liquidated 71% of its gold reserves since the invasion began. Gold reserves are not a routine asset. They are the emergency buffer, the store of value you hold precisely because it can't be inflated away or sanctioned out of existence. So selling 71 is not portfolio management. It is a government converting its last real financial cushion into operated cash to keep the war running. This is something else that I covered in a video back in November when the Russian government began really selling off its gold reserves in noticeable amounts. Now, defense officials reportedly told Putin this year that the war was running at least $28 billion over budget. It is projected to overspend by a further $54 billion in 2027 and 2028. The territory Russia is acquiring, the Donbass, the southern oblasts, works out at approximately $90 million per square mile gained. $90 million per square mile of a neighboring country it was supposed to consume, occupy, take over, liberate in days. So at that rate, with 0%, a blown budget deficit, 71% of gold reserves gone, and a civilian economy where half of all sectors are shrinking, the question is not whether this is sustainable. It's not. It's the question of what breaks first and how badly. Now, there is one dimension of this crisis that receives less attention than inflation or debt, but may be the most structurally damaging of all. Because you can adjust interest rates. The Bank of Russia, Central Bank of Russia has been doing that. You can print money. They've also been doing that. But you can't conjure back a missing generation of workers. Russia is experiencing now the most severe labor shortage in its modern history. Close to 500,000 soldiers killed. Hundreds of thousands have been wounded. Hundreds of thousands of working age men who have left after mobilization was announced and have not returned. And the military continues absorbing working age men from the civilian pool, not through formal conscription in most cases, but through financial incentives so large that factory workers and delivery drivers are choosing frontline service over those safer civilian jobs. Civilian companies cannot find workers. Those that do find them cost dramatically more because war-inflated military wages have reset expectations across the entire labor market of Russia. Those higher wages feed directly into inflation, which feeds into the higher interest rates, which feeds into higher borrowing costs for the company paying their higher wages. This is a self-reinforcing cycle with no exit, a negative feedback loop. So Russia entered this war with a working age population already under demographic pressure. It has accelerated that pressure dramatically, and the workers who are gone, dead, wounded, fled, or deployed will not be back. That is not a problem that the central bank can solve. That is a hole in the foundation of the Russian economy that will widen regardless of what any monetary policy decision says. Now, I want to take a moment to say that if you find this kind of analysis, this coverage valuable, then do consider subscribing. I do my best to be objective in my analysis whilst acknowledging my own biases. And if you're interested in finding future upcoming interviews as well, then do subscribe, because we've got Sarah Payne coming back on. We've got General Petraeus. We've got H.O. McMaster. Some top tier names coming up this summer and the fall. So be sure to stick around. But back to the video. Now, the report I mentioned earlier points to the most likely next crisis. Not the budget, not inflation, the banks. Russia's banks have been used as instruments of state economic policy, pumping liquidity, extending credit, encouraging mass borrowing in ways that have made them systematically vulnerable. As loans deteriorate, as companies miss payments, as consumers buckle under debt servicing costs and rising prices, the banking sector is absorbing losses that will eventually require either state bailouts, adding further pressure to an already strained budget, or defaults that shake confidence in the system beyond comprehension. And then there is state pension funds. Reports, unconfirmed but not to be dismissed, suggest that the Kremlin is considering seizing pension funds to plug this budget gap. Pension funds, the retirement savings of the older Russians who form Putin's most loyal demographic base, and he has not touched with a barge pole. The fact that this is reportedly being considered tells you just how bad Russia's fiscal options are right now, more than any state official statement could. When a government starts looking at its citizens' retirement savings as a potential revenue source, nothing else exists. The central bank is caught between two choices that both end badly: maintain high rates and choke the civilian economy further, or cut rates too fast and reignite the inflation. It's been cutting slowly, carefully, and the market's response has been to question whether the cuts are driven by economics or by political pressure from businesses drowning in debt. That question alone is destabilizing. Now, I want to leave you with a phrase central bankers use for a situation that looks stable on the surface but has structural damage accumulating underneath. They call it a slow-moving crisis, the kind that does not announce itself with a single dramatic moment. Indeed, I've used the phrase, along with colleagues that we've hosted on the show, a slow-moving car crash. No, these sorts of things arrive through an accumulation of individual decisions: a family withdrawing savings, a company missing a payment, a bank extending a loan it knows it's bad, or a government selling gold reserves it cannot replace. You have compound interest. Well, you also have compound problems. Russia is in a slow-moving crisis right now, and the woman who walked into her bank this week and put her savings in that drawer is not panicking. She's not making an irrational decision. She is reading the situation clearly and responding accordingly. The Kremlin can control what gets said at the press conferences, but it can't control individual behavior of Russian consumers and what they do with their money when no one is watching. And indeed, right now across Russia, in apartments and houses and small businesses, be that from Moscow to the Far East, people are watching, and they are choosing cash to de-link themselves from the system. That is not the behavior of a population that believes in what is being said by its government or its government, period. And governments that lose the belief of their own people, quietly, individually, one withdrawal savings account at a time, do not tend to recover easily. But if you enjoyed this video, everybody, then do subscribe, do give it a like, it's free, and consider ringing the bell so you know when the next update, my next analysis, or next interview are released. And we'll see you all in the next one. Take care.